Hello traders, and welcome back to the StopHunt Syndicate. My name's Greg, and this week I'm going to run through a few pairs. I apologize for my absence. It's been a bit hectic. I was taking a bit of a break over the summer period, just managing a few longer term positions, not really doing too much in the way of day trading, and it's been a bit crazy these last few weeks. Lots of volatility. But the markets are in a very interesting position right now. A few of the pairs have either broken the January yearly high or the high that's been put in for this year. A lot of them are consolidating around key major levels. With a bit of luck, the second half of the year, we may see some decent movement. So rather than doing a single pair, what I'll do today is we'll run through a few pairs. So if you could all bear with me and spare me your time, I'm sure in the long run it will be worth it. One quick thing before we get into the charts is I just wanted to say a big thank you to all the recent subscribers. I appreciate it. Please obviously continue to hit that like button and leave me comments and any feedback, and I'll do my best to get back to you. Now moving on, I've got a few charts we'll look at. Let's start here on the Euro New Zealand dollar, and I've already marked it up for the purposes of ease of navigation, and this is out here on the daily, and you can see here this was the January 2019 high, previously here broken beginning of May. Well, we didn't actually close above it, so we broke this beginning of June, and since then we pushed all the way back down here. We had this nice strong bullish run kind of starting at the end of July, and we've since pushed above, broken and closed above the June 2019 yearly high, and it's just kind of started to consolidate here at the top. Look, you can see this wick, but it's the way it closed isn't particularly scary. So if we drop down from the daily to the 240, you can see here that we are indeed kind of putting in this flat bottom descending triangle. Now, generally speaking, or statistically speaking, they generally break out of these in the direction to which they entered them, which would suggest that this is on for some continuation. And you can see here that it's already collecting some nice stops here, and what I'm actually looking for this to do is perhaps to continue a little bit more before obviously dropping down and cleaning out anyone that was long. Cleaning out all the stops, anyone that was long that's positioned under here. Now there might be some people positioned under here. As we know, most retail traders, given the fact this is a euro pair, quite a high ATR, they'll like to position themselves as close as possible to the price action, and this will invariably take them out and move in the direction that they had originally intended. Now, if you look at this box, it's held as kind of this little support and resistance zone, and it goes back reasonably far. It's had some nice key bounces off of it, and here's a major little tip. If we chuck on a 200 EMA, you can see here generally what price does when it interacts with the 200 EMA. It's probably one of the most underrated indicators there is, used by quite a lot of banks and institutions. And what I am expecting from this pair is that if we consolidate a little bit more, and I'm hoping that this will close the gap between the price and the 200 EMA, and then what I'm looking for is it to push down as close as possible, preferably a touch off the 200 EMA, but if we can get somewhere near it in this box and then look for some signs of exhaustion or reversal, then what I'll be doing is I'll be looking to take this long. Obviously, good place to potentially take some profits or to monitor what happens to the trade is these highs, but ultimately if we push back out to the daily, I'm certainly looking for a kind of retest of these highs here, kind of around the 178 flat, possibly up to 79. But again, what we'll do is we'll monitor the trade as we get up to these highs here. Alright traders, I hope you enjoy that one. Let's move on to the next chart. And here we have the Australian Canadian dollar. Playing on the back of the theme of continued Australian dollar weakness and the likelihood of the RBA cutting rates yet again. I'm certainly looking to ride this further to the downside. You can see here, sorry, let's just delete this garbage. You can see here that we've been in this continual kind of downtrend for a considerable amount of time. You can see here I've got this little previous StopHunt marked up. This was a beautiful little trade, push right back up. Didn't get anywhere near the 200 EMA, but I think, yeah, that's the 50 EMA. It was in such a strong bearish push down that there was no chance of it getting back up to the 200. Great little opportunity, and essentially I'm looking for an identical kind of setup to the one we see printed here. Now this is more of a kind of ascending triangle. Once again, continuation pattern, more likely to exit the triangle in the direction that it entered the triangle. Just a bit of a different kind of makeup. If we drop down to the 240, this is, bearing in mind this is on the daily. If we go back to this one, on the 240, you can see we did interact nicely with the 200 EMA. This was a beautiful little level. Just look at all that money just sitting on top of that level there. We dropped away, everyone getting excited and shorting it. We came back up, we started to drop away. There's money, 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 bang. Nice little double top there. Sorry, I digress, but it's all useful learning information. Nice little double top here. Very, very bearish engulfing candle. Excellent signal to get in on. If you wanted to get in a bit earlier and a bit cheaper, once we rejected this level again, you could have put a market order, and that strong move down would have dragged you into the market, stops above the high. If you didn't catch that big bearish engulfing is all you really need to know. That would have easily seen you in the trade. Couple of little opportunities, no real stop hunts on the way down. This thing just tanked. I'm essentially looking for something of that sort. Now this one, as you'll notice, is not as clean as this one, so perhaps err on the side of caution a little bit. But what I'm hoping is for this to continue. We're likely to push down here, push back up, and all the time, hopefully, this will This will certainly get some more interest, like people getting involved, you know, shorting the little break of the little outside returns, and hopefully this will accumulate some more money. All this money is all liquidity to the big banks, and if we chuck on the 200 EMA, you can already see that this consolidation is drawing the price closer to the 200 EMA on the 240 chart. I mean, it doesn't really get too much better than that. So what we're looking for is an interaction. It's okay if we break the 200 EMA, providing we close back below it and back into this zone, or we get a big pin bar, or big bearish engulfing, or a daily bearish engulfing, or something of that nature, to suggest that we're not going to hold back above the 200 EMA. So what am I looking for if this does play out? Essentially, certainly keep an eye on the lows just to make sure that this doesn't go into a range, which is another possibility. We could just end up going into a range. But ultimately, I'm looking for this lower level to break. If we fly out to the daily and we look left, you can see here that there's a nice gap between where the last sort of major trends started and where they finished. Big one there, big one there. This one finished here. There's a little bit in between, kind of this level here, around. Actually, that's where our price action is now. So yeah, no concern there really. What I'm looking for, certainly looking at, will be this kind of 88 flat level. That's a little bit of a zone, and ultimately this level here, the 86 flat level. That's the June 2010 lows, and we caught some nice price action here and here and here, and obviously here. This goes back a long way. So push back to 240. Obviously, I'll leave targets up to you guys. Targets are a personal preference. Obviously, you want to be aiming for a minimum of 2 to 1, but if you can really push those risk rewards, your win rate doesn't need to be particularly high in order for you to be an extremely profitable trader. Obviously, once again, keep an eye on the lows. If it does go into a range, we'll just take that as it comes. It might go into a range and then produce a stop hunt before moving lower. Just be cautious that if it does go into a range and break the 200 EMA with some real aggression, then it might be in for a rotation. But just looking at where it's sitting, it's kind of in the middle of nowhere. So I don't really suspect that that's going to happen from here. If that's going to happen, it's going to happen a fair bit lower. Okay, enough of that chart. Let's move on to the next one. And we have the Euro Japanese yen. Now here, I'll just delete these arrows so they don't confuse everyone. This one I'm a little bit torn on. I was a little bit torn as to whether I should actually do a video on it. But I'll go through it and I'll explain it. And there's a little, I think there's a little stop hunt up here from July that we can have a quick look at too. Now this one's a bit tricky. I do suspect we are headed lower. We did close, let's go out to the daily. We did close and break below the December low back here at the beginning of August. We tested it kind of end of July, broke below, closed below on a daily basis at the beginning of August, and essentially since then we've just been in this little consolidation band. Now it's a bit tricky at the moment, and I think this is one to keep an eye on going forward, where we don't really know what it wants to be yet. If you take those wick highs and join them together, it kind of looks like it's forming this falling wedge pattern, which is, as we all know, is a reversal pattern. So the potential for this to reverse. However, you know, if you grab a couple of boxes and you kind of join the price and the wick lows, then it could obviously potentially be, let's get rid of these lines so they're not confusing, then it could potentially be also stuck in a range. So I think for the time being, this is just one to put on the back burner, just to keep an eye on, see what happens. If this does continue within this range, then I'll just be a bit cautious as to what it does. Obviously it will be accumulating stops here, as it will here, both sides, and that goes with most of them traders. You know, there'll be stops positioned above and below. Just keep an eye on what it does. If we do get a nice push up, interaction with the 200 EMA, and then a push down, I'd be quite keen to short this, especially given the recent sell-off of the euro, and some of the data coming out of the euro is not great. Obviously, if it continues to develop this descending or falling wedge, then just play it with a bit of caution and perhaps see what happens. I'd like to see this develop before I really put my hard-earned cash on the line. And if we are going lower, well, you see we may just consolidate in this falling wedge and just continue to mosey on down to this 117 level. However, 117, if we go out to the daily, is not particularly exciting. It has held some lows. A little bit of action here. A little bit of action here. The bigger level is the 115 level below it. You can see 115 certainly held some wickage there, some major price action in the past. Will it consolidate all the way down to 115? Who knows? Unlikely. Let's extend this. But I mean, the market is full of surprises. So one to watch out for. I think that's it for today, traders. There is one more, one that I'm less keen on. Let's just run through it for the benefit of everyone here. So you can see here on the euro dollar, this is the daily chart. We set the June 19 high here, so wick action here, price high here, and recently, beginning of August, we put in this big bullish run. I had this big rejection to further advances here, but then we've just kind of consolidated for 1, 2, 3, 4, 5, 6 days. I originally thought this again might be a triangle, but we towards the end of this week we broke down below this level. Nonetheless, there will be money sitting under this level. We started to push back up. You can see here we started to push back up, and obviously had we have got a push back and a retest or a decent close back inside this, I would have certainly been keen to take it long. But you can see here we have another kind of wedge or kind of descending, falling wedge, I think is probably the best way to describe it. So we're in a bullish market, and typically this is a continuation pattern. So we've got this falling wedge, and it's likely to continue to the upside. Quite when it does that, well, we've just kind of tried to interact with the 200 here. It would not surprise me one bit if we do push down a little bit lower, maybe to this one. We did touch that 163, but if we push down this little bit lower, you can see there's been some nice price action off this level here. Plenty of interaction. And here too. So it wouldn't surprise me if we do push down a little bit further, interact with the 200 EMA before reversing and pushing higher. I was hoping we were going to get this little stop hunt. However, the market didn't play ball for us. Anyway, traders, I apologize for the long video. I've been absent for a while, so I thought I would do a longer video rather than a shorter video. I hope you like this sort of content. If you do, please give it a like, give it a share. Perhaps I'll come out with some more informative training type videos moving forward. And as always, traders, don't forget to trade safe, and I'll see you in the next one. Hey traders, Greg here from the StopHunt Syndicate again. This is just a quick addition to the video. We talked about a few Australian dollar, Canadian dollar and euro charts, and I just wanted to bring to your attention the economic calendar for next week. So bear in mind the drivers for those charts and some of the figures coming out. So we've got some low-key data for the New Zealand dollar and the euro. We've got final and CPI, core CPI. Big one on Tuesday, RBA monetary policy minutes. Some medium data for the CAD manufacturing sales. That would be a good indicator for the economic health of the Canadian dollar. We've got, what else have we got? CAD, CPI, big one for the Canadian dollar. CPI, common, median, trimmed core. What else have we got? We've got some flash manufacturing for the Aussie dollar. And Thursday being a big day with some Eurozone PMI data coming out of France, Germany. That'd be a pretty big one. And on Thursday also, you've got ECB monetary policy meeting accounts and New Zealand dollar retail sales, followed by on Friday CAD core retail sales. So action-packed week next week, especially for those pairs that we have just been through, you know, the euro, the CAD, and the New Zealand dollar and the Australian dollar. So just be mindful of all of those. Let's see how those charts develop. Might be some good opportunities to get in on some big moves. Anyway, traders, that's it from me. I'll see you next time.